Hello everybody, how's it going? This is Richboywayne, aka the Specialist of Opportunity. And as you can see, today has been a green day for me. I am up about $68, almost $69. Nice. So we'll see how the day goes, or the week goes rather. In today's video, I want to share with you a technique that I use to trade earnings. As you know, this is earnings week. This is the week that the big tech companies like Google, Amazon, Tesla report their earnings, and I want to show you guys this technique that I use to make insane gains, insane profits during big tech week. So our journey begins with Yahoo Finance. So we go to Yahoo Finance here. You can actually get to this by just typing in Google earnings calendar, and it should pull this up right here. And I usually like to go for the ones that either have a before or after. Usually it'll say either after market close or before market open. I like to go for the before market open companies. Those for several different reasons. One of them is being assigned. You run the risk of getting one of your legs assigned when you go for these aftermarket close, and there's just a lot of volatility after the market closes. So in my experience, for me personally, the before market opens usually do better. You have better price swings than these aftermarket closes. Just my experience. If you have any experience and maybe you want to recommend the aftermarket close, go ahead and leave a comment in the video, and now I will take a look at it and consider your position. But for me personally, I found that these do better. So we're going to take a look at one. We're actually going to look at Monday, because today is Tuesday the 27th. We want to go back to Monday. We want to go back in time, and we're actually going to look at this company right here, the Aaron's Company Incorporated. Ticker symbol AAN. So we'll go here, type in AAN, like so. Here we go. And as you can see, we had a pretty significant price drop. So what I would do is I would go in, usually about here. I try to go in at least 2 days before. Sometimes the previous day. But it really all depends just how the market's doing. So remember, we want volatility. We want a stock to be volatile for this strategy. So what I would do is I would come in here, and I would usually start about right here in the morning of the previous day. Go into trade and options. Well, before I do that, to do my due diligence, I usually scroll down here and I look for this right here, this widespread of the previous earnings, because what we want is we want this to increase. We don't want this we want this to expand and kind of just go whoop, whoop, like that. So we go to trade and options. Once we have identified this as a potential option to trade, we're going to go to buy call. Make sure yours is set to buy call. If you do not see this, it is because you do not have level 3 options enabled on your account. Just go to account settings, scroll midway through, and you should see an option to enable or to request level 3 options on your account. So once you have this, then you're going to go to here, you're going to click on this, then we're going to switch over to the sell and go to here, click on it. And as you can see, we got a pretty decent range here. So in order to make this max profit, this nice juicy $335, the stock cannot be between here or here. So what that means is that we want volatility. We want a stock to either be way down here or way up here. And as you can see, this stock was there. If we go back to the previous day, We go here. We would have set up our option strategy here, and then we would have waited, and then I usually like to wait around 8:30 to 9 o'clock to take profits. I do not hold these overnight after the prices either went up or down. So I usually take profits the same day, the next day that I place the option, depending on when the earnings are. There we go. Depends on whenever the earnings are. So usually, the price either shoots up or it shoots down. I take profits, rinse and repeat. You get the idea. Take a look at one that I did that I really kind of messed up on, but not really, which is the Tattooed Chef. I went ahead. I did this one. I think I bought somewhere I did this one the previous day. I think I got in like right here. We had a significant price drop around 8:30, and I held like an idiot. And because of that, I should have just sold it. Like I said, I usually sell around 8:30 or between 8 and 9, depending on the market and everything like that. But I didn't sell, and I was an idiot. And because of that, I lost $17 and some change. Maybe. We'll see how the day goes. Am I really worried about that though? Not really. Because the way I also like to do these is let's just find another one. Let's go to Apple. So ticker symbol Apple. AAPL. And we'll look at something similar. So let's see. Typically we'd buy in right here. Previous day. We'd wait. And as you can see, it goes. This thing just drops off a cliff. Let me see that, dude. That's crazy. Look at that drop. We're gonna go here. See what we would have gotten. Remember, it's buy, sell. So buy, sell. So this one isn't really too great. I mean, $25. You got to look at it like this. Would you risk $75 to make $25? Personally, I wouldn't. It's just not worth it for me. But you can do whatever. But what I typically like to do is I don't do the strike of this week. I usually do the next week out when I'm doing these. It just gives myself more time to be right. So we just do that, and you get some pretty decent profits too. Not on this one though. On these more expensive stocks like Apple, Google, Tesla, they don't really give a lot of max profit for some strange reason. I don't really know why. I'm not a mathematician, so I don't really understand how the max profits calculated because I'm a smooth brain. But you get the idea of this strategy. Go here, pick a date. Let's say, for example, we'll pick a day in the past. Let's see. We'll go for what's a good one. We'll go for this one. Never heard of this company before. Let's take a look at it though. Yeah, we got that significant price drop. So we go here. Buy in like right here. Then it goes to 850. Previous day. Go in here. Sell. Let's see what we would have made. We would go to, remember, it's buy, sell. And this is a good one. This is a really good one. Wow, I should have actually traded this one. Okay. This would have been a good one to trade. Because as you can see, August 20th, and we got plenty of time to not be in between either of these. And so we could have made $483 with this with this one. We didn't, unfortunately, but there's always tomorrow. There's always another stock. So just come in here, just play around, look at some potential profits, and then when you're ready to pull the trigger, just go ahead and go. Now, sometimes they would give you a credit, which is kind of cool. If it gives you a credit, I usually take the credit and I mark these off in an Excel spreadsheet so I can know if I got a credit or a debit. But I hope this tutorial helps. If you like my content, go ahead and leave a like. Go ahead and subscribe, because I'm always coming out with videos helping you to become financially independent and financially successful. But as always, stay up, stay positive, and I'll see you guys in the next video.
Yeah, this song is dedicated to all my AMC, GMC holders, all the people who bought in Tesla when it first came out. This song is dedicated to you.